Hi, I'm Matthew Morrison from the practice. Unless you already have enough assets to cover your cost of living for the longer term, then I would argue that the subject of this week's video is in fact the most important part of your overall financial strategy, at least for right now. If you fall into the category of 99% of people that are yet to create financial freedom, then your greatest asset is not your house. It's not your super balance. It's not even your vintage car collection if you have one. Your greatest asset is your ability to generate income. It's your earning capacity. Most people get excited about building wealth or creating future financial freedom. However, let me ask you, what is one of the key ingredients that is going to be required to achieve your wealth creation goals? It's cash flow. As I say 23 times a day, it all comes back to cash flow. Cash flow is like oxygen. When you have it, you don't think about it. But when you don't have it, you think about it all the time. And without it, virtually nothing else is possible. Think about what you're earning at the moment and also what you're likely to be earning in the future. Just imagine if you had a money tree at your home, whether it be in your backyard or in your lounge room, generating cash, rain, hail, or shine right throughout the year. And every month this cash was deposited in your bank account. How well would you look after that tree? Would you water it? Would you fertilize it to help it grow and produce even more cash flow? Would you insure it? So if it got hit by lightning and the money producing branches and leaves got burned, cash would still be deposited in your bank account until the tree was able to regenerate. Some people may get complacent and take the tree for granted and think the tree will always be there. But I'd say that most people would protect that tree with their life. I probably don't need to tell you that you are this tree. Your ability to generate income and also amplify that income over time. It's your key to creating your financial future. Because of this, it's absolutely crucial to have a strategy around how to best protect your earning capacity. It's also crucial to have a strategy around how to best grow your earning capacity, but we'll save that for a later video. Now, let's take a minute just to consider how great an asset is in fact your earning capacity. As you can see from this table, let's say, for instance, you're 35 years old, you're well qualified, doing well, you're earning about $100,000 per annum. Assuming you're able to grow your income just a bit above inflation by continually getting better and adding more value, then between now and age 65, you're likely to earn a total of over $6.6 million. Those are Powerball jackpot numbers. But you don't need to buy a lotto ticket. You just need to invest in and protect your earning capacity. At the practice, an alarming amount of new clients that come to us for initial wealth creation advice. They have a mortgage, a couple of kids, great earning capacity, and no wealth protection cover in place. If the main income earner was off work for health reasons for an extended period of time, or maybe they were to pass away prematurely, then the family would be in severe financial stress pretty quickly. As financial advisors, it would be irresponsible of us to put in place plans around how to best invest clients' income without first putting in place plans and strategies around how to best protect clients' income in the event of them being sick or injured and not able to work, or having one member of a couple pass away prematurely. So taking all this into account, how in fact do you protect your earning capacity? Well, you do this through implementing a personal wealth protection strategy. And this should be tailored to your needs and your circumstances. And amongst other things, really include 4 main areas of wealth protection cover: life cover, TPD cover, income protection, and also trauma cover. You're probably pretty familiar with some or maybe all of these, but really briefly, income protection pays out around 75% of your total salary package in the event of being sick or injured and not able to work and have a loss of income because of that. Life cover, or maybe it should be called death cover, pays a lump sum to dependents if a person passes away. Trauma cover pays a tax-free lump sum in the event of all the major illnesses, but look, 85 to 90% of claims are typically for cancer. And then there's total and permanent disability cover, which also pays a lump sum in the event of a person being totally incapacitated and never able to work again. While the context of this particular session is all about personal wealth protection, business owners out there should certainly keep in mind business succession planning. We'll cover this in detail in a separate video. But if you're a business owner with one or more business partners who is not your spouse, if you haven't already, then implementing a bulletproof business succession planning strategy should be a priority. It's all about providing control, cash flow, and certainty in the event of a business partner passing away or being away from the business for a long period of time due to health reasons. But back to personal wealth protection strategies, your need for cover really depends on your individual circumstances, and a good risk insurance advisor would work closely with you to really tailor wealth protection advice to your needs and your circumstances, as well as importantly to your budget. It's all very well to have the ideal level of cover, but it definitely has to be affordable and affordable for the longer term. That's where structure and also the right advice is crucial. Most clients deem it appropriate to allocate 3% to 5% of their gross income towards protecting their income, leaving the other 95 to 90% to really cover their lifestyle spending or debt reduction, wealth creation plans, as well as, of course, some tax. As you can see from this graphic, clients in their 30s and 40s, they're usually in their peak years in terms of needing wealth protection cover. They have young families or maybe kids towards the end of primary school or even through to high school. They're just starting to really chip away on their mortgage. Plus, at that age, they've got many years of strong earning capacity ahead of them. It's during these times they need a solid mix of life and TPD cover, income protection, and trauma cover. And over time, as assets grow and debts reduce, their need for cover drops off. And so the level of cover can gradually be reduced also. One of the promises I made to myself 15 years ago when first becoming a financial advisor is that I'd never recommend any clients do anything unless I'm first prepared to do it myself. And for what it's worth, I'm insured to my eyeballs. So is my wife. While I don't dwell on it too much, it gives me a lot of comfort and peace of mind to know that our kids will well and truly be looked after if one or maybe both of us are no longer around or unable to work longer term. At the practice, several of our clients claim on income protection and trauma cover every single year. While it's definitely an unfortunate situation, it makes me happy to know that we've played a part in protecting their financial future to ensure that a major health problem doesn't become a major financial problem. This way, clients who need a claim, they're able to really focus on getting better without worrying about how they're going to pay the mortgage or even feed their kids. A number of you know my story. For those that don't, just briefly, I've experienced the benefits of wealth protection cover firsthand. Back in 2008, my wife and I were living in London. And during that time, I was involved in a major car accident and I was unable to work for more than 12 months while I learned how to walk again from scratch. Thankfully, I'd taken my own advice from a few years earlier. And the income protection I had in place ensured that the majority of my income still rolled in the door and rolled into my bank account so I could really just focus on getting better. What would you do if your income stopped due to health reasons for 12 months or more? At that stage of our life, having no income protection at all and no income rolling in for 12 months would have made a significant dent in our finances. And it would have been a major step backwards. Having appropriate wealth protection cover in place, it really allowed us to get through that year without drawing on any savings. And the savings that we did have, some of that was then used to buy a house upon returning from London. And this asset, this house that we bought, has really helped fuel our wealth creation plans ever since. Importantly though, not all wealth protection policies are created equal. The quality and the structure of policies counts, and it counts massively. Many people think, hey, I'm fine, I've got some insurance in my super fund. However, quite often this is the bare minimum default cover and it's grossly inadequate for most people's and most families' needs, especially anyone with a mortgage and some kids. Also, income protection held entirely inside of superannuation, it's incredibly limited as to when it will and when it won't pay. And in my opinion, I don't think it can be relied upon to protect you and your family in the event of a loss of income due to health reasons. More comprehensive cover and good structure is absolutely crucial. This is where a personalized insurance advice from a specialist can be incredibly valuable. If you're allocating 3% to 5% of your income towards protecting your income, you want to be sure that you're going to get paid in the event of a claim. Rather than have a cheap and nasty policy that you might have got off the internet or off the TV that doesn't do any assessment or underwriting at the start, but instead they do it at claim time typically, and then they try to find every possible reason to get out of paying. During my last 10 years with the practice, we've had nearly 100 clients claim on their personal risk insurance, and every single one of them has been paid and protected because we only use quality providers, we structure policies appropriately, and we also ensure that proper underwriting and assessment is done up front. At the practice, we also have our own financial services license, which means we're licensed directly through ASIC. And when it comes to insurance or superannuation or even investment advice, we're free to recommend whatever provider is most appropriate to our clients' individual needs. Within our personal wealth advisory division, we also have a risk insurance team headed up by Eddie Scapelli, who's our in-house wealth protection specialist, and in my view, one of the very best in the business. I'd highly recommend that you contact us, and you can see the number here and also our website. Contact us for a complimentary risk insurance review where our team can assess your needs and also make sure what you have in place is appropriate for your current needs and circumstances. If what you have in place is good, we'll tell you, so you have that certainty and peace of mind and second opinion. And also, if what you have in place is not appropriate, then we can help you develop and implement an appropriate risk insurance strategy tailored to your circumstances and your needs, also importantly, your budget, so you can really make sure that your greatest asset is protected. Now, whether you reach out to us or not, please do me a favor in the next 48 hours while this is still fresh in your mind. Pull out your last superannuation statements and any additional risk insurance policies that you might have in place. Make a note of what wealth protection insurance you have, what life insurance you have, what trauma cover you have, TPD and income protection. Then make a note of your mortgage. Also your future earning capacity from the previous numbers we went through, along with future goals, wealth creation goals, even kids' education, spending goals. Have a chat between you and your partner. Really discuss what would you both want in terms of a financial outcome in the event of one of you being sick or injured or unable to work longer term? Or what would the other want if one person actually passed away? Then resolve to investigate and implement an appropriate wealth protection strategy. Please do this in the next 48 hours. Otherwise, you and I both know life gets in the way, and this may end up being one of those things that you should have done or will eventually get around to do. Make it a priority. Remember, it all comes back to cash flow, and a solid wealth protection strategy forms the foundation of your wealth creation journey as you work towards creating future financial freedom. I'm Matthew Morrison, and remember, to create financial freedom, be decisive, get committed, take action, and also protect yourself along the journey.